Stock market today analysis for Aloha Monday, May 1st, 2023. At the 30-second mark of this video, a link is going to pop up right here. And at the 1 minute mark, another link is going to pop up right there. I put these link to these videos. Oh, here's the first one. Boom! There it is. Unfair advantages of selling cash secured put options on stocks you wouldn't mind owning. I'm putting these links at easy to remember places so you can watch this video and then go back and watch those later. Another one is going to be at the 1 minute mark, 5 reasons why you should be doing this. Right? And people that understand why have an easier time figuring out the how-to. And figuring out the how-to after you have an idea of the why can be achieved. Oh, pardon me, right here. Boom, right? 1 minute mark. Figuring out the how-to is much easier to achieve when you understand the why. If the why is hard enough, if the why is high enough, the how-to becomes easier. So for the how-to, we got free stuff, which you can access here through this playlist and these downloads. And then we also got paid stuff. Take advantage of whatever suits you after you check it out. And let's really get into it. So today we had this ISM manufacturing PMI report come out. We want to remember that there's what's reported, and then there's the market's reaction to the report. And we also want to keep in mind that although numbers don't lie, people do. And who input these numbers? People, right? So it's not about debating these numbers. It's about understanding these numbers may or may not be accurate, and whether they are or are not accurate, there's still going to be a market reaction to them. So it's really like balancing a few different plates on your, you're spinning sticks at one time. And then tomorrow we got the JOLTS job openings, non-farm payrolls, ISM services PMI. Oh, look at this FOMC statement. I think during this time is when that blowhard Jerome Powell is going to be flapping his pie hole. Unemployment claims, and then non-farm payroll, average hourly earnings, unemployment rate. So this could be a pretty volatile time in the market. What we also have going on, let's see if it's showing up here in any news. Okay, so we got more layoffs, job cuts. Let's see, this one's an ad. Okay, U.S. could default on debt. Maybe this is another raise the debt ceiling thing. Here's what I was looking for. All right, First Republic. So Yellen, another blowhard who said during her lifetime there won't be another financial crisis, and there's already been 5 bank failures this year, including Credit Suisse. So you really just want to be aware that that there's what people say, there's the reality, and then there's effect on the market, whether or not what they say is real. Let's look and see what the markets did. Hopefully I won't be leaving Oahu anytime soon. This last trip to Arizona really kind of got to me. A lot of time zone change in a short amount of time. But let me peek at the futures real quick. Let me try to, instead of explaining a bunch of stuff, I just want to take a look and see where things are, what's going on. Okay, let's take a look at how the general market's closed. The dollar up a little bit, but it's still in the sideways range. Look at this, the TLT representing 20-year treasuries really sold off, hit this 1 month low today. Gold still going sideways, creeping down below 2,000 in this range at the low end of the range. We'll see how that's going to go. Oil in this low end, maybe I think it was it 72 to 82 before? Now it's 73 to 83, something like that. It's a bit volatile. We see overall the long 200-day moving averages got a good slope down. Futures of Bitcoin at the low end of its range, but basically going sideways over the last month. Again, the VIX hits a new low for the month. We're just beating lows and beating lows. So I hear more and more people talking at different things to look at if you really want to get a good idea of the fear index and having less of these zero DTE options affecting this VIX calculation. But nonetheless, you can, like, personally, I normally trade in a way that's not really looking at the VIX too much, but I guess it's worth looking at. And again, it just really proves that there's, look at all these layoffs right here. Look at look at this. These traders preparing for a risk ahead. Yellen is talking about U.S. could default. So that's people are getting nervous about the Fed meeting, supposedly getting nervous, and regulators seizing First Republic. But nonetheless, the quote-unquote fear index is hitting a monthly low, right? Really, really low. And we got a number of, see these candles right here? These are all giving us a little indication of a top. But we're hitting the month high, hitting the month high, hitting the month high. Not so much over here. It's having a hard time getting up. Moving averages. This 3 out of 4 moving averages, the stock's trading significantly above the moving average, with the moving average moving up. Besides this one right here. Let's go through look at these 12 sectors. Yeah. Possibly putting in a short-term top through different, possibly could, definitely could go higher. Let's look at our line chart right now since it's already on that. Okay, getting close to this 420 mark over here on SPY. Last time, it's closer this time though than last time. This is where it pivoted last time. Here's where it's at right now, getting kind of choppy through here. And then let's keep watching what happens. Is it going to push through the 420? And if it does, how does it behave through 420 to 430? And then if it goes past 430 up through 440, and then what happens? Right, last time we were looking for that, it was, hey, what's going to happen through 420? It turned around and went the other way. But right now, we'll see. Let's look at individual stocks. If you have watched these videos before, you know what the deal is. We're going to be looking at the 4 major indices, the top 10 holdings of the 4 major indices, even though there's quite a bit of overlap. SPY, we looked at, we got this topping tail right up in here. Oh, by the way, we're looking at a 6-month chart, each candle being 1 day. Hitting this resistance in this resistance area right here. So we'll see how that plays out. Apple, this one is helping to keep the market up. It's in a lot of different ETFs and mutual funds and things like that. What I quickly notice is this W pattern right here. So we got our one part of our W right here, with this part being significantly lower than this, and we're breaking above of this midpoint of the W right there. But this candle right here is showing us running up, looks like possibly running out of some momentum, and we got more sellers in there than buyers. Look at the volume tapering off over the last couple days. Volume, some people really look at that as a primary indicator. I just kind of look at it as a secondary indicator. And let's see how that one plays out. Microsoft, big gap up here. Have been right moving up, kind of moving sideways. Must be earnings. Did Apple report earnings yet? They're gonna report earnings when? When are these guys reporting earnings? What is that? Oh, it's Microsoft. Should be relatively soon. I think it's Amazon, battling this 200-day moving average and moving the opposite way. Quite a bit of a pullback over there. Facebook, gapped up on earnings. Got right here is a gap up on, is it right there? Yeah, something like that. Gap up on earnings. Not kind of moving sideways. But look at this earnings gap. So if this, and it would be somewhat of a wise thing to put a straddle paper trade on the next earnings report and see if it's gonna bump up like that. Google, which is overly represented in these flipping indices. All right, unlike its similar counterpart, Amazon, it's staying above that 200-day moving average. Battled it right here and tested it, staying above that 200-day moving average, but hitting that 107-ish resistance right in there. Berkshire Hathaway kind of broke out of this sideways range and moving up. Looked like it was going to start going sideways again, but moving on up. Tesla, not even battling the 200-day moving average. But don't worry. Elon Musk he's a genius, so this is all a part of his big plan. Before he was born, he was planning it out. No, I'm just joking, just making fun of the Elon Musk fan people. And I know some people have now turned into an Elon Musk hater, so let me make fun of them too. Oh, Elon Musk took over Twitter. All right, now we got equal representation of making fun of both people on each side of the spectrum of Elon Musk. Nvidia broke out of this sideways range today, and that's looking strong. So we got a handful. How about JP Morgan Chase? Look at that. Gapped up here into this resistance and pulled back a little bit, but JP Morgan Chase, I think Jamie Dimon is actually the true genius that's slowly becoming the one bank to rule them all, and must be good. I was thinking today, man, if I could be somebody else, looking out from the outside in, Jamie Dimon seems like he's got a pretty not necessarily a life of integrity, but it seems like he's got a life of money set up for himself. So, because I don't know all the background, I'm not going to wish to be somebody else. But okay, so over here on the Qs, we broke out a bit of this resistance of the 320, but it's if we're drawing a complete line in the sand, we broke out. But if we're looking at more of a range in the sand, we'll see what happens. It's slowing on some momentum today. Apple, we already looked at. In fact, we already looked at all these ticker symbols except for these two, because there's so much overlap in those Fruitenheimers, or I was trying to think of some new fandangled word. And we're going sideways here on PayPal in the sideways range. And yes, it's going sideways under this 200-day moving average. This is not a surprising look, right? It's kind of the Amazon, Tesla, Google used to look like this. Now this is looking more like Google, where it was under that 200-day moving average, battled the 200-day. Now it's above it, going sideways. Let's take a look at the Dow Jones. We'll get a little bit different look. Look at that. Great. It's so beautiful when it's really this long, volatile candles. I just really love the look of that. And nonetheless, my little fantasies of beauty, of charts, really have nothing to do with you making money. So we're stuck here in this resistance right here. How about this? This is another beautiful volatile one. Looks like the $500 mark is giving us some resistance. How about what some people call government sacks right here? You see that, don't you? Resistance right through there. What's going to happen? Pulling back a bit. Home Depot going sideways. Got up to that 200-day, pulled all the way back here, but moving back up. So it's in this kind of sideways range. We'll see which way it's going to go. We looked at Microsoft. Now let's look at Salesforce. Salesforce going sideways. These tech stocks, I guess some are above, some are below the 200-day moving average. McDonald's still running strong to the upside. It broke out of this trading range. Good thing your good buddy Brent never pulled the trigger on putting that iron condor. I guess I could have put it in a paper trade and just learned how to, suck up the losses or how to adjust that loss. But I guess it goes to show you, what, some things that go sideways don't go sideways forever. This one has really been on a strong run to the upside. Honeywell still battling that 200-day moving average. It looks like if we can look at the past is possibly what might happen in the future. This is not a surprise to see this big wick to the upside because there's a lot of resistance right through here. Visa, no matter how great of a business model Visa is, even greater. Look at this. They got us. How many shares do they got out? Times how many shares they got out by $232. You look at a lot of excess capital to be able to go and do things. And sometimes those things are pay people. Good bribery. This is good bribery money right here. When you're selling a piece of paper for $200, $300, $500, you can take a lot of that money and buy off politicians. That's a great way to get things done for yourself. Good old-fashioned corruption. And 230 to 235, it's kind of in there. It seems like we'll see if Visa's going to break out beyond that. Amgen on the bottom side of that 200-day moving average, which is really kind of a, it's like a self-fulfilling prophecy type of thing. Alrighty, and we got Boeing. Boeing flying sideways. Is this going to do the breakout? We will see. McDonald's did it. Berkshire Hathaway did it. Let's take a look at IWM. I'd like to see what's going on with these small mid-cap stocks. I don't know if you do or not. I guess I just really don't care if you do or not. I have such a joy doing it myself. Okay, we're hitting that resistance. This is another one that, man, were these the ape people? I forgot if AMC had those diamond hands, apes, laser eyes. I don't know if that was just the Bitcoin people, but anyone that's thinking AMC is going to the moon, it's delayed. That flight is delayed a little bit. I'm not sure how long it's going to go, how long it's going to be delayed. But I tell you what, there's a lot of upside between $5.65 and the moon. Theoretically, you could probably jump on board this space shuttle taking off to the moon at $14, and you could probably still make a lot of money. So if you want to fly to the moon with AMC, I would say that wouldn't be. It definitely would probably be a safe bet to get on board that spacecraft after it's really, if you really want to, $9, it's really got to break this high, and you could just say 10 to be safe. If you're getting volume like this at $10, it might not make it all the way up to the moon, but it might make it to 14. So just be careful, when you're listening to talk of the town, talking about how something's slingshotting to the moon. Because I'm not the greatest cup and handle type of guy, but we definitely got a cup sort of bottom formation here on Shockwave, and just starting to move sideways. What do we got? Let's look at 1 year. All right, I want to be surprised if it gets kind of stuck in there. You got some real resistance in there. Biohaven sideways, right here, right? This $14 mark. Really got to break through that $14 mark if that's going to join AMC to the moon. And another one, right? Here's another one that's got that Tesla, Amazon, used to be Google type of look. I forgot what other ones we saw that are like that. Crocs, I think Crocs. Woo! Crocs done fell off. Oh, man. When I was in Arizona, that was falling off. I wasn't even paying attention. Oh, I'm sorry. I'm sorry to myself. All right, so I guess that was that on earnings. Very well. Looks like it was right on, possibly on earnings. Look at that. A lot of big money moving out of that. It fell all the way down here. Basically, and if you would have had a straddle set up on that, it probably would have been a good one. But look at the party isn't necessarily over. It does look like this bullish run right here. Looking at this pivot right here, it hasn't broke that pivot, so just seemed to fall back into the sideways spot right there. What is this? Chart Industries, another one that's just, you know, cruising sideways. It's the sidewinder, like a sidewinding snake below this 200-day moving average. Corona. Oh, it's another nice volatile one. It's beautiful red and green back and forth. Man, look at that. Look at the sideways movement right there. And look at that, just battling that 200-day moving average. It's just like kind of stuck in this range. It looks like it's going to possibly breaking out of this range. I will be anxious to watch and see. Another one dropped down, but Pelios took a dive, took a big bull candle up here today. So for me, a lot of these things, I just love selling cash secured put options because, like I was talking about doing the Iron Condor. Where was that at? Dow Jones. Let's look at McDonald's because I remember for sure I did that. So Iron Condor, are you familiar with what that is? When I first started learning about option trading back in the day, the Iron Condor was like the golden strategy. It was like the be all end all. You know, it was like, oh, an Iron Condor, and over time, I don't know if I can't say I've done a whole lot of them. Like I definitely understand what it is, and I enjoyed just doing credit spreads and not needing to really play, I guess, a little safer. You know, and if you say, hey, you're too safe, blah, 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 like you really have no clue what's going on in my life. You do not. You're only seeing one little picture. Like your good buddy Brent, I've got some areas in life where I'm loaded up with risk. And if you ever get loaded up with risk, it's okay to, you know, minimize your risk in the stock market so you can focus on your riskier activities outside the stock market. But anyways, let's look at an Iron Condor. What is an Iron Condor? An Iron Condor is a credit spread, right? So you're selling a call option here and you're buying a call option here. So you got a credit spread and you got a spread and you sell this one. So your money is flowing in, right? When you and Thinkorswim, when you sell something, they put a little negative sign. So you got money flowing in. So I'm going to put that as a positive sign though. F Thinkorswim. Who cares what they do? So you got money flowing in here, and you're buying this one as an insurance. So you got money flowing out. And when you have this money flowing in minus this money flowing out, you're still left with money left over. So you're netting, keeping money. And you do that same thing down here. So you sell a put option. So you got money flowing in from a put option here. And you buy insurance here. So you got money flowing out there. And then you're left over, your net transaction, you're left over with money. And what's nice about this is the stock can't be up here and down here at the same time. And for a long time, see, it stayed between here. I don't know if that's a long time. Depends on what your definition of long is in this situation. But now up here, right, it broke out of this range. So you'd be in a kind of a losing situation. So what I like to do, assuming you know there's money to buy at least 100 shares of this, I like to just sell. I like to sell a put option somewhere in here. As long as I like the stock, and I don't mind buying the stock at $255 per share, get 100 shares, then I'll just sell it. So I don't have to really worry about adjusting, right? Because there's only two things that could happen at the end of this contract. One, it stays above $255, it expires worthless, I keep the credit. Or two, it goes under $255 it expires in the money, I keep the credit and I buy 100 shares of a paper asset that gives me a dividend, so an income producing asset that I wanted to own anyways at a price that I had already decided I'm okay with buying it. I love that. I love that situation of not needing to, make adjustments and all this type of stuff. Why? Mainly because of what I'm doing outside of the stock market, which I'm a pretty busy Brent, pretty busy Brenty over here. So that's what I like doing. And then I'll give you a little extra secret that I don't advise you to do, but once you get a little more skilled. So sometimes sooner or later I have 100 shares, and then maybe I want to buy more, right? So I sell another put option. But I do something that's I don't sell an iron condor. I do more of a strangle. So now I'm short a put option down here, and I'm short a put option up here, as long as I'm okay with buying it right up here. So I start watching it, right? This one's going to expire, it starts running up, and then maybe somewhere in here I buy 100 more shares to cover my position. So if it keeps running up, I get called out. I made the premium from selling the call, and I make whatever capital gains from about right here to my strike price of 85. But if you're like, hey, you could have made a lot more money there. Yeah, I could have. I get it, Nostradamus. It went past that. But sometimes what it does, Nostradamus, is it goes this way. And so Nostradamus, when it does that, then I keep the premium from selling the call. Now I got another 100 shares. And guess what I do then? I sell another put option. I sell more call options. Right? So this works really, really well. It takes more management. That's the one thing when you're doing this, doing the naked call and you're going to convert it into a covered call. It takes more management, because I don't, if this stock starts running up and it's going to compromise my short call, I got to be able to buy 100 shares of it, beforehand. And I also need to know that I want to be accumulating shares of this, because it might not get called out. I might end up accumulating more shares. So picking the right stock, understanding how much money you have in your account, which should be relatively easily, right? It should be relatively easy to understand how much money in your account. You look at the numbers. But sometimes when it comes to trading, people get a little wild and they start putting all these trades on, and they don't pull out a calculator and start calculating, okay, I got X amount of dollars in my account. Here's my commitments. And they just keep putting on trades. Then all of a sudden things can kind of go sideways, and they're like, oh, Snapples, I don't have enough money to fulfill all these obligations. You got to pay some attention, right? So with that, what you guys got for me? Anything? Okay, no questions, no comments. You guys have a fantastic day. Aloha.